Good afternoon. Welcome to Insight. I'm Shalini Verma. In its set of proposals, the group of state finance ministers set up to review the composition scheme under GST suggested a higher threshold for businesses to avail of the plan, along with lowering of tax rates for traders, restaurants and manufacturers. It also suggested allowing businesses who are engaged in interstate sale to avail the composition scheme. There are over 1 crore businesses registered under the GST. Around 15 lakh businesses opted for this scheme, which allows them to pay taxes at a concessional rate and makes compliance easy. In its recommendation to the GST Council, the group of ministers headed by Assam Finance Minister Himant Biswa Sharma has suggested lowering tax rates for manufacturers and restaurants under the plan to 1%. At present, while manufacturers pay GST at 2%, the rate for restaurants is 5%. It also recommended doing away with the tax rate distinction between AC and non-AC restaurants, those which are not covered under the composition scheme, and tax them at 12% with input credit. Also, eating out at hotels which has room tariff of more than 7,500 rupees should attract a uniform 18% tax rate. On easing compliance burden on small and medium enterprises, the group of ministers suggested that the government make it amply clear in the present law that MRP is the maximum retail price of a product to be sold in retail, and charging anything above this is an offence. Apart from this, the GOM proposed a reduction in penalty for late filing of returns from Rs 100 a day to Rs 50. The panel also pitched for extending the quarterly filing of returns facility to all taxpayers. And the group of ministers was set up earlier this month and was tasked with revisiting the tax structure of different categories of businesses with the aim of rationalizing the rates, apart from making the composition scheme more attractive for businesses. So how effective are these suggestions? How will it help in evolving the GST? To talk more on this, I'm joined by Dr. Yashovardhan, who's Additional Commissioner with the GST. And I'm also joined by Professor Arun Kumar, who's a retired professor from JNU and presently Chair Professor with the Institute of Social Sciences. Welcome to the program. Well, how would you respond to all these suggestions which have come from the GOM, Dr. Pathak? Do you think they are a welcome move, welcome suggestions, and they will certainly help evolve the GST further?
Well, these suggestions are very, very pragmatic. They are welcome suggestions, as you rightly said. One of the suggestions is to increase the composition scheme from 1 crore to 1.5 crore, the entire turnover.
That's right.
So that more and more people could come under the ambit of composition scheme.
And the fact that the last council meet had suggested that this threshold be increased to 1 crore, which
it has already been
75
increased.
lakh. That's right. Yes, right. It has been increased
to 1 crore. Right. Now it is to further increase to 1.5 crore. The concessional rate of duty for manufacturers, which was at 2%, should be lowered to 1%, and the concessional rate of duty for in the composition scheme for the restaurants, which was 5%, should be lowered again to 1%. Also, it is proposed in this that small traders who keep exempted goods as well as unexempted goods, non-exempted goods, they can have a uniform rate at 0.5%, and they can sell both the non-exempted as well as exempted goods.
Okay.
Apart from that, a very significant suggestion is that even for the small scale ones, like more than 1.5 crores turnover, they should also have a quarterly return.
Okay.
They can pay taxes monthly, but the return is to be submitted only once in 3 months.
And what is the system presently?
Presently, they have to give monthly returns, monthly 3 returns.
Right.
So that will be that is one of the suggestions. Then, of course, the manufacturing sector, the job work is to be brought. It is proposed to bring the job work also under the composition scheme. Then there are a few other suggestions which will be specially focused towards the small scale sector, which will be welcomed by the small scale businesses, I believe.
Okay. So, Professor Kumar, do you think what exactly is the main focus here that one can gauge from these set of suggestions coming from this panel?
So, as has been already said, these are targeted at the small scale sector, because GST is a very complex tax and India is a very complex country, and that's why two complexities came together and made the things very unviable in some sense, and there's a lot of hue and cry, a lot of traders protesting, etc. about the GST. So there are two things. One is the implementation of GST and the other design of GST. Now, in the design of GST, it's very difficult for the small scale and the micro sector to implement it. So India has the large scale, medium scale, small scale, micro and cottage sector, all with different requirements, the lower level, they can't computerize, they can't deal with the input credit system and the reverse charge system that has been brought about, etc. So that's where the complications were coming. So what the committee seems to be suggesting, and what the previous council meeting, they were recognizing these difficulties. That in the implementation, there was all these difficulties that were coming. There were the problems with tax rates and at what time to pay, the paperwork that was involved, the computerization. So I think all that is getting simplified through the process that the committee is going through. However, in the design itself, certain changes are required. Because, for instance, reverse charge, if you're in the composition scheme and you buy something from, the big fellow buys from the composition scheme, they have to pay a reverse charge.
Okay.
Now that reverse charge is going to be very difficult to deal with, because first you pay the reverse charge and then you claim credit.
Right.
So instead, I'd prefer to buy from the large scale sector rather than from somebody in the composition scheme
plans.
or from somebody in the small scale, for which I will have to pay the reverse charge as the large scale sector. So somewhere these things also need to be looked at by the committee.
But are you hopeful with all these things coming from the GST Council, since we know, and you have also said that there are those very fine lines which, there are certain corrections which are needed at certain levels, and perhaps you see that reflection even in the GOM suggestions.
So it's good that the council is responding to all these difficulties that have come up. It's very good that they're doing something for the small scale sector, but I think in the design itself, where the problems of input credit and the reverse charge are there, I think those need to be dealt with at a conceptual level.
Okay.
If they're not dealt with at the conceptual level, I think many of the problems that have come up will remain, in spite of implementation getting simplified, as he's rightly pointing out that now you have to file quarterly rather than 3 returns every month. So that was meaning that you had to file 37. Then if you're in the composition scheme, you cannot supply cross state. Now that itself was causing a problem. So
and now aren't there those suggestions now come up on the interstate sale and other
if
things?
you're in the composition scheme, it is being proposed that you can very well go for the interstate supply.
Which means that they are very much going to be a part of the e-commerce platform too, which earlier I guess there was some issues around this interstate sale part.
Yes.
So how do you look at the things that Professor Kumar here raises about the input tax part and the other things which, as he says, are a part of the design and they need to be revisited?
Well, Professor Kumar very rightly said that we are keeping our feedback channels open. These feedback channels are open for our business friends, for friends in the industry, for friends in the trade, and it is a learning process for us also. For as a department also, we are interacting with them, and even now every week there are various channels through which feedbacks are coming, and these feedbacks are being examined, and on basis of these feedbacks these recommendations are being proposed. So there are things which are being implemented. In the last council meeting, the taxes were lowered on 27 items from 28 to 18 and 12 and other slabs. Also in regard to composition schemes, there are various innovative things which are being proposed now, and as regards to the purchase from the unregistered ones, that has been kept in abeyance till March.
Okay.
Because as Professor said that causing the purchase from the smaller ones is getting little difficult, so that has been kept in abeyance, the reverse charge mechanism, as Sir said. Apart from that, wherever we are getting suggestions and wherever those suggestions are, we feel that those suggestions can be put to practice for the benefit of the trade and in the industry, those suggestions are being examined, and regularly there are various setups, like we have tax research units, we have various feedback mechanisms. So those are being taken care. I mean, it's not a closed door. Every GST council, there are things which are being...
That's a larger message which is going across, that it's certainly not a closed door, and there are several other opportunities which are open, and there is, as you said, an open window there for a lot of feedbacks to come in and those things to be incorporated. But what about this? You said something about the filing of returns part, sir. The idea is to simplify the processes, ensure that more and more people become, more and more enterprises, entities become a part of this.
Yes.
How do you think is that going to make the process smooth for the GST implementation, this part particularly, the filing of
the
returns?
idea of computerization, which has been brought in because there's a GST network, and you're supposed to feed your data of sales under GST1, and then under GST2 you're supposed to match what you purchased, etc., and then the GST3 gives a composite and then an annual return. So what people worried about was that here you had to file 37 returns in a year. And then if you're operating in, say, 30 states, that makes it 1,100 returns in a year. So that was something that people were very worried about. So it's very good that they're simplifying this to say you pay your tax every month, but you file quarterly. So that reduces the complexity. So the earlier thing where you're having 17 taxes, including cesses, etc., there were a lot of paperwork. Idea of GST was to simplify all that.
Which is now going
which
to happen
is what
with this quarterly filing?
will happen. But I think for the large scale sector, which will still probably file monthly returns, 3 returns, etc., probably not for them, but it's good that at least for the composition scheme and for others in the small scale sector, this will get simplified. So simplification is something which is very crucial if this is to succeed. But one other thing I'd like to point out, that if you move away from reverse charge and from exemption, etc., then what will happen is this tax, instead of being VAT, will tend to become ad valorem tax. And ad valorem tax is where you had the cascading effect coming in. So in some sense, this is something which is in the design, which the council will have to take very careful look, so that the changes that are made don't result in cascading effect reappearing.
Okay.
Cascading effect is already there in a sense, because some of the basic inputs like petroleum, like real estate, like alcohol, electricity, these are basics. They are exempt from it, so they're not part of the GST chain. So something would have to be done there also if cascading effect has to be removed, which was one of the central focus of the GST tax. So some of these things are conceptual, they're in the design, and they would need to be looked at in the next council meeting, so that some of these things which are creating problems of their own, they could be dealt with. Another is several rates of tax for similar commodities.
Okay.
Like your hotel bill, if it is below 1,000, below 2,500, now maybe 7,500, and there is, in a sense, you can mismatch. Or like sweets, it could be mithai or it could be prasad,
Yes.
And you could have a different rate on that.
Yep.
So some of these things would also have to be looked at. So this confusion that is there as to where do I fall. And people are clever, businessmen are clever, they'll try and fit their thing into such a category that, there'll be some dispute about it, etc. So these are the conceptual things that would also need to be looked at by the council, so as to simplify and make better implementation of GST.
So do you think, Dr. Pathak, that this indeed is also a part of this whole brainstorming which is going on even around the GST implementation, how to implement it in a better way, the kind of things which are often raised, that it happens to be one of the complex systems which has too many rates, too many compliances, too many regulations, and other things. So is there going to be more pruning of the list of the things also which fall into those several slabs of tax rates, and also some sort of a simplification of the process? Is that also part of the whole GST Council meets and the other things which are going on basically on the GST implementation?
Absolutely. As the GST would evolve and as the GST is evolving, you see the various structure, various rates that is not applicable for the composition schemes. They have one taxation rate. They are not to go by the as we say, the harmonic system of classification. So for the small businessmen, for the small traders, these things are not applicable. So the whole intention here is to simplify the business processes for the smaller ones. Even for people who have turnover more than 1.5 crores, the Council of Ministers has proposed that there also the returns can be submitted quarterly, though the taxes could be paid monthly. So simplification is the core of GST. And as regards input credit, we have some differences as to in hotel industry. For more than 7,500, the taxation rate is 18%, and for less than 7,500 is 12%. So such differences are there. How much of that would be simplified? How much of that need to be simplified? I can't say. But the intention is to make life easy, to make business easy for the smaller traders, for the bigger traders, so that there is a seamless flow of credit both for goods as well as for services. So we are working on that, and I believe as GST takes shape as GST evolves, and GST Council will take a positive and a pragmatic view in every meeting. I mean, every time the council meets, there are decisions which favor smaller businessmen, decisions which favor the export sector.
Right.
So that is happening, and since we have kept our channels open, since we are interacting with the trade, and the government is working very seriously on that, and very pragmatic suggestions are coming, which are making life easy for in times to come. I mean, it's just a start.
It's a continuous process, as
we
you
are
say.
4 months into GST, so by the time, just give us some more time, and things will be as
Okay, fine. On that note, we'll take a very short break in Insight. Stay tuned for more on the other side of the break. There's a lot to know basically about the GST composition scheme and how all these suggestions will impact the small businesses. More on that after this break. Welcome back. Goods and Services Tax has brought in a new regime of business compliance in India. The government has introduced the composition scheme under GST, which is seen as an extension of the scheme under the VAT law. When opting for the composition scheme under the GST, a taxpayer will be required to file summarized returns on a quarterly basis instead of 3 monthly returns, as in the case of normal businesses. Well, before taking the discussion forward on the composition scheme, I'd like to welcome Shubhamay Bhattacharjee, consulting editor with Business Standard, on the panel. Shubhamay, let me first take a view from you on the GOM recommendations on the GST implementation. What kind of signal is the GOM sending here, especially for the small businesses and others?
What it's basically doing is that, the GST regime is actually sort of surprising on the upside for several reasons. One of the things is that the GST, the way it was we had in 2015, we were not sure whether GST would come. It rapidly came in as a constitution amendment. States agreed to it very fast. The rollout happened. Similarly, when the rollout happened, those were all upside. It sort of made, realize that India actually has the zeal and the fervor, and the polity is willing to take the risk of moving to a transparent tax regime. The next part of it, which was not settled when the GST regime was done, was about the rates. And the blame lies squarely with the states. There are two major areas from which the states get money. One is alcohol, the other is petrol. States have traditionally been most reluctant, every Indian state, no matter which government it is, to find out new sources of revenue. These two have been lazy sources of topping up their revenue. And that's why the first thing that they did was, when the GST was being structured, they rushed to firewall these two. Essentially, when that happened, what happened was the weight had to come on the other items. And that's why, despite what the experts had been saying, to have a low tax rate, which is what internationally is the norm, and obviously that's the reason why we were moving into GST. In fact, the Vijay Kelkar formula, the grand bargain was 6% central, 6% states. It couldn't happen. So we had tax rates ranging from 5, 12, 18 to 28. We have discussed this several times. And that was done along with the fact, not only that, the states did another, they sort of committed perjury to the offense. What they did was, they said that entity which was registered with them will have to file a monthly return. Now, the central excise does not insist on that, but it was something which, because of the state's insistence, came into it. Now, what has happened is, and that is what I am saying, it is surprising us on the upside, is that the weakness or the problems that this creates has become so evident so soon that in less than a year, we are now moving to possibly a more rational regime. One of that is that the states, that the companies would be filing a quarterly return instead of a monthly return,
right,
which is absolutely sane. I mean, why should everybody forget their work and instead have to file returns? But this was simply happening because the states had not raised the quality of their sales tax commission rate. In fact, what had happened is, there is another part to it, and I really want to put it on record here. Indirect tax has traditionally always been collected by the indirect tax department, the central excise and customs officers, and they have a considerable, over the last 70 years, Professor Kumar has been tracking that, considerable expertise in collecting that, knowing where to go for the offences, how to handle it. They had been largely marginalized in this entire process by the IAS lobby. And the sales tax guys are basically the IAS guys. And it was this fight between the two officers, groups, and these are very major fights, and I had reported on that extensively. So, it is not something which is sort of flash in the pan, something happening in some nook and corner. It is very substantial, but people took their eyes off the ball, thinking it was a political fight. It was not a political fight at all. 16 states are BJP ruled. I mean, where does politics come into it? They would have broadly gone in the way the center would have said. Give and take some issues like Gujarat, for instance, was very keen that they will get a manufacturing tax offset.
So, think
so it was basically these things,
okay,
these the what I might call the problems that was created by the state governments, which had created this consecutive series of difficulties, which now
are resulting in these kinds of
suggestions. Are now finally deciding that no, fine, we can't have this anymore. We need to unwind the problem. For instance, the problem of 28% tax, or when I was.
Do you think it's in a way? It's a good process, because let's say even if through the GST Council meetings, through these GOM and whatever suggestions or panels are being set up or the meetings are happening, at least we are reaching at something which is going to be much stronger than what was, let's say, conceptualized.
Sure, that's that, and in fact this is where we should have been 3 months earlier. The reason why we hadn't reached there was, again, I mean, I put it back to the fact that the state government simply refused to play ball on a rational system. So, instead of making it a simple tax, they wanted to put in as many lemmas as possible, putting a mathematical term into it, to say that my life should not get into risk. I, as finance minister of particular state, should not have to step out of my office to create new revenues, to sorten out my tax system, to ensure that things are done properly. And it was that collective, what I might almost call collective perfidy, that resulted in the GST running up into the problems.
Okay. Professor Kumar, the fact that you said that there were different groups that had been protesting against certain norms, small businesses, small traders were among them. What kind of relief are these suggestions going to give, particularly to the small businesses, and apparently also the impact on the big businesses, the big players here?
So, as was already said, those who are under the composition scheme, that limit is being raised to 1 crore and possibly 1.5 crores. The returns that they have to file, that is getting simplified. The tax rates that composition scheme people will come under, that is being simplified. So, many kinds of simplifications are there which will help the small businesses to cope with this. But as I said, in the design itself, when the reverse charge comes in, that is creating a problem as far as small business is concerned. So, the design itself will require a relook. What will happen to those below 20 lakh and those in the composition scheme from 20 lakh to 1 crore, or if that limit goes up to 1.5 crore.
How do you find the idea of the GST compositions, the composition scheme in particular?
So, the composition scheme has to be a very simple scheme, because these are the people who are unable to computerize without incurring a lot of cost or not able to deal with the complexity of it. So, this scheme the composition scheme has to be a very simple scheme. Unless it is very simplified, and it almost, as I said earlier, becomes like an ad valorem tax, because if you do away with reverse charge, then you're not getting input credit, so it's just like an ad valorem tax. And ad valorem tax is a simple tax as compared to the value added tax. So if it becomes that, then the question will arise: what happens to the totality of the input and the output scheme that you have, where everybody is interconnected? So in other words, conceptually, this has to change. If it doesn't change, then I think the problems will remain at one level, they'll shift to a different level. So my suggestion is that. Second is the rates, as you said, are very important. What has been done is that we have first a revenue neutral rate, and then fitment of each commodity to some rate which was close to where they were earlier. And in that, some commodities have gone up, some have gone down. But the R&R rate itself is probably too high. When the average was suggested by Arvind Subramaniam committee was more like 15.5%, and then earlier the Modi committee had suggested around 12%. My own feeling is, given that we have expanded the net, where a lot more things have come in than were earlier there, probably it could be brought down. And if it is brought down, many of the problems will be taken care of, because the states are worried that they'll lose revenue. So even though the centre has assured them that for 5 years they'll be compensated for any loss of revenue, they're still worried that it might happen that they begin to lose revenue and their deficits will go up. And when the deficits go up, then their programs will have to be curtailed under the FRBM kind of situation that they are under. So there are many fears.
Is there a possibility of this kind too, Dr. Pathak, for the R&R to come down further? Is there a possibility of the kind?
Well, once the tax base expands, which is the ethos of GST, the tax base is supposed to expand like in the regime. So once the tax base expands and the revenue growth is optimum as the government would have expected, I certainly feel that there is a strong case for the revenue neutral rate to come down. But that depends on how the GST evolves, how the collections are. GST collections come out in the first year or maybe in a couple of years. But once the tax base expands, once more sectors are covered, there is certainly a case for the revenue neutral rates to come down.
Okay. Taking the discussion forward on the composition scheme in particular, the focus of this GOM was also to review the composition scheme. That's why some of the very constructive suggestions have come up on that front. What is it that, let's also focus on the objective behind this scheme. Why was it considered in the first place, and why now, every other, from the group of ministers to in fact even the council, is focusing a lot on expanding it, on ensuring that more and more businesses become a part of it?
Out of a total of 90 million registered, I think 9 million registered assessees, only 1.5 million came into the composition scheme. The expectation was more. The expectation was that perhaps more would come in the composition scheme. So now, when the rates especially for the small eateries, the restaurants have been proposed to cut down from 5% to 1%, I believe that itself will be a big boost to that sector, and more people would join the composition scheme. The other was also for the manufacturers. Once the manufacturing, the rates would be cut down from 2% to 1%, more and more people would join the composition scheme. Also, the traders, one difficulty was how do they segregate the exempted goods and the non-exempted goods, because any shopkeeper or any kirana store or any trader for that matter has both exempted as well as non-exempted goods in his kitty. So now they have come up with another innovative idea that it's a flat rate of 0.5% that can be charged, and we can do business as usual. So such new ideas are coming up, so that more and more assessees, more and more business people could take advantage of the composition scheme, because a composition scheme essentially was designed for small businesses and to make business very easy for them, to make it more and more business friendly. And they have to file quarterly returns, which was there from
which has been simplified which is at least proposed.
Absolutely, which was there since the very beginning. Also, they have to pay taxes quarterly. So there's not much of paperwork, there's not much of interactions, or there's not much of hassles with the department that people in the composition scheme would have to.
Okay, we'll take a very short break now in Insight. Please stay tuned for more on the other side of this break. Well, since its launch, the GST Council and various high-level committees have been trying their best to bring a degree of simplicity to GST by tweaking rules and issuing clarifications. The idea is to ensure that the GST implementations become smoother and better. And they are, apart from the various recommendations, which, the sets of recommendations for the small enterprises and the others, there is much there even for the maximum retail price, which is an important part. Well, I'd like to have your view on this, Professor Kumar. The fact that the GOM has also suggested that it should be made clear in the present law that the MRP is the maximum price of a product to be sold in retail, and charging anything above this is an offence. How do you look at that part? It's very consumer friendly, this thing coming up, but the fact that there are practices that exist, there are people who are charging more than the MRP.
And I think this again is happening because the input credit system is still not sort of being absorbed by the businesses. So like in the case of restaurants, they haven't lowered the price on the list price of their menu, because if they are getting input credit, then they should lower the price. Similarly, when you go out to buy, say, a toothpaste or something else, there's an MRP which includes the GST. Earlier, it included the excise duty and the VAT, within it. So this input credit system is probably not working, and businesses are probably worried that they'll not be able to get the input credit, and that's why I think what they're doing is that on the MRP, if you take a bill, there are two systems working I found in the market. If you don't take the bill, then they're only giving you an MRP. If you take the bill, then on the MRP they're levying a charge above the MRP. So in other words, there's a tax on a tax, so it becomes very, very complicated that, they're actually profiteering out of it in some sense, And that is because the input credit system and the, reverse charge system, they have not been operationalized properly. Businesses are worried they'll not be able to collect it. The second point is that the GST has become inflationary, because if you're having to pay more, then the inflation is kicking up. And if the RNR is high, that would automatically lead to inflation, because say services, for instance, have gone up from 15% to 18%, right? So all service charges therefore have gone up. Now services are 60% of the production. If 60% of the production prices tend to go up, then other prices will also tend to go up, unless input credit system and the reverse charge system begins to work properly. So therefore, unless the system itself begins to work properly, there will be inflation, and the consumer will therefore lose out. And businesses are also very maybe confused, or maybe taking advantage of it in some sense. Some may be taking advantage, some are confused because they're not able to work the system. So in totality, what is happening is that this GST is at this point proving to be regressive as far as the consumer is concerned. And this is something that the finance minister had announced, that we are keeping 5 different rates so that the common person is not hit. The 50% of the commodities are supposed to be kept out of it, which the common person is supposed to consume. But there's a problem with indirect taxes. Where you levy an indirect tax and where it is felt are two different things. So on wheat, for instance, you have no GST. But because wheat has to be transported, the moment diesel goes up, the moment truck goes up, it affects the price. So therefore, it's levied on, say, diesel. Diesel, of course, doesn't have GST at the moment, but say batteries or truck, you levy it there, and it will reflect in wheat prices going up. So therefore, the regressivity of the tax, that will continue to remain, and that increases if your RNR is high.
Okay. How would you reflect on that part, Dr. Pathak? These issues related to the GST and the inflationary pressures that it then way puts. How do you look at that?
After launch of GST, to put facts very straight, the inflation has come down. I mean, earlier it was hovering around 4%. Now it's come down to around between 3 to 4%. So the inflation part is certainly not impacted by GST. I would certainly like to clarify on the MRP part. The MRP is the maximum retail price. There cannot be, and as you very rightly said, that charging GST over and above MRP is an offence. And we have been emphasizing that through our, through our advertisements, through our various interactions, and even through our field formations. We have such inputs that there are businesses which are charging MRP over and above the GST over and above the MRP. That is absolutely incorrect. So that certainly is the stand of the department, and that certainly is the correct position.
Okay.
Just one comment. Our wholesale price index does not include services.
Okay.
So therefore, when services prices go up, the wholesale price index doesn't reflect it. Secondly, in the post-monsoon period, vegetable and other prices come down. So the wholesale price index may come down because of those reasons rather than because of the.
So you're saying that it's not exactly
so it's not,
capturing the picture that.
So
that
it
you're
doesn't.
saying.
And the consumer price index also has only a weightage of about 25% for services.
Okay.
So even consumer price index doesn't capture the increase from 15% to 18% for large number of services. So for instance, if your restaurant charges have gone up, if your say telephone charges have gone up, if your insurance charges have gone up, etc., they're not captured by that, either the WPI or by the consumer price index. So this inflationary impact is why the consumers are also reacting, and that's why the demand in the economy has come down, and that's why the rate of growth of the economy has slipped a little.
Okay, Shubhamoy, how do you look at this, the MRP part, which the GOM talks about?
Yeah, I have never seen a businessman who's confused about what price to charge. So I take it with not a pinch, with a bucket of salt when a business guy says, I don't know which price to charge. He jolly well knows which price to charge. If he's not charging it, then there is a reason why he's not charging it.
True.
It's as simple as that. Dr. Pathak is absolutely right. MRP says that clearly, MRP prices have to be charged. A business guy knows it, but he deliberately, and there are lots of reasons, and that's been one of our basic problems in India, that a lot of our business in India has run on a system which frankly is that of no system. In other words, fleecing the consumer. So that is definitely there. And I don't, and the problem is that in this entire GST debate, a lot of business people have been trying to co-opt the consumers to say that you are in trouble. It's actually the reverse way. The consumer doesn't need to be involved about anything. Why should the consumer particularly bother about which way prices would be, which way the business would be working out their business system? That's their lookout. They don't charge, they don't transfer profits when they make it. So why should the consumer be? But it's been a peculiar thing that the business guys have been trying to, especially the middle and the small business, lots of them, the traders particularly, have been trying to do this particular piece. So that's about the MRP. The MRP thing is very clear, but the one problem is the states. MRP, that it should be on the that it should not be more than price, it should not be charged more than MRP, is something that every state law has to do it. A central law cannot do it. So there is a problem there, which absolutely, so every state has to get it. Again, I'm putting I'm getting to the role of the states. In this entire thing about what's happening, you find most finance ministers of every state sitting very quiet. They aren't taking part in the debate at all, whereas the problems, all the problems practically have been created by them. And that is where that's where if the business is also suffering, it's because of them. Very few business have to deal with the central excise, and frankly speaking, it's a big business which deals with them, and they don't have too much of a trouble. Service tax, but the state governments, sales tax departments have been notorious dens of corruption, and obviously, for obvious reason, business doesn't want to get involved with them. The reason why many of the companies, many of the small traders don't want to come even into the composition scheme is because they don't know, because of history, that what is it that they are getting into. Now that is a crusade which the states have to launch. Have we seen many of the states launching it? I don't see them. Whereas this is a central and state activity together, this tax reform thing. Most states have been avoiding this.
Professor Kumar, very quickly on the role of the states.
So, I'm not that clear cut that states are creating all the problem, because the states have to worry about their deficit, about their revenue. And what you're seeing is that, like in the first month, 93,000 crores was collected, but 60,000 crores of input credit was being claimed. In the next month, it had slightly declined, etc. Whereas, you're collecting 10.5% of GDP as indirect taxes. So you have to collect from GST 10.5% of GDP. On a GDP of 150 lakh crores, you should be collecting about 17,000 crores of indirect taxes. Now, if you're collecting only 93,000 crores, then you're collecting maybe about 10.5 lakh crores. Now, the point is that your petroleum and your other goods will also get something, but it's very close to getting less than what you may be collecting. So if your revenue falls short, then the center will have to compensate, in which case the center's fiscal deficit will go up. and so there are complications there, and that's why I think the states have been very cautious about the whole implementation of GST, and they have got it from the center that for 5 years they'll be compensated if there's a revenue
but
shortfall.
I don't see any reason why states, why
would
that
not
should stop a state government from issuing an order saying MRP is the price
I'm
to
not
do
talking
it.
about MRP.
I mean, I
I'm
don't
saying,
think
I'm
for
saying
that
about
matter,
revenue.
even on the
No,
composition
I'm talking about the
scheme
revenue part.
Okay,
Of course,
I
MRP
think
has to
we
be
need to
implemented,
talk a bit more about how the center and the states together should be implementing it, and why states should not be really creating any issues, and also, as well as the road ahead for the GST implementation. What more changes can one expect in months to come, especially in the design of the GST? Time for a very quick break in Inside. Welcome back. In the last segment, we analyzed the road ahead for GST and the challenges that need to be addressed. Well, Dr. Pathak, I'd like to ask you here, how do you respond to these points being made about the states, and why the states should rather facilitate the GST implementation in a smoother manner? Because half the things emanate, as Shubhamoy says, from how the states administer.
Well, in the GST regime, the states and the center, they are working as a team. So it's the entire team that is working, and it's the entire team that is working to make the GST, to get the best out of the GST. The entire ethos of one market, one nation, and one tax is being implemented together. So I don't much see any tight wall between the center and the state. It's a team effort, and I think this team is working well. We are taking inputs from the state, and the states are as well as giving their inputs. Also, the entire design of GST, as you said, once the assessees are totally divided between the center and the states, like the one assessee has to only deal with one department. That is the beauty of the GST. He doesn't have to interact with two departments. So that is one of the center points of the idea of ease of business doing. So I'll not differentiate much between the center and the state issue. I mean, it's a federal GST council. It's a the whole idea of the federalism works on the GST council, where we have representations from the state and the center. So it's a joint decision. It's a decision by the council, and both the center and the state officers, we are working on to get the best out of the GST.
Okay, Shubhamoy, there has been a number of things which have been said about and around the role of the rollout of the GST. The fact that it will help the economy and the fact that it will also bring down inflation. Professor Kumar thinks otherwise, and he has points there to say. So, and then also about how it will facilitate the startups, the digital and whatnot. How do you look at now the road ahead for GST? What are the indicators that one see in all these months?
Yeah, one of the first things about GST is that GST is not a one-shot thing. It is a process. No one should have thought that GST started and sort of got everything right on 1st July. Whichever date it would have started, GST will have such a major tax exercise for a country, which will have to have, there will be issues there to be sorted out going over the years. So that is one part of it. This is not the first one, obviously, as we have seen, and I am definitely not expecting this to be the last one of issues that need to be sorted out.
Yes.
And these will continue. The second part of it, GST, is the GST is something that every section of opinion agreed that GST is necessary to reduce the tax complications that India has. A very interesting point at which Shalini, you are referring to it today, for instance, the World Bank is supposed to come up with its 2016 report on ease of doing business. Now, if India does well on that, we don't know how it will be, but will definitely be a reflection of the fact that India has brought in GST.
Right.
So, therefore, this is a very fundamental change in the Indian tax structure. We need a corresponding change in the direct tax structure.
Yes.
But in the indirect tax structure, this is the big change. To make India a national market, the third part of what you are asking about, the digital economy, the small entrepreneurs. Entrepreneurship by itself can only flourish when rules are predictable. Rules predictability is what GST strives to provide, and definitely the GST structure is about that. The fact that rates are high or low, or people are having genuine problems about the small business having problems on the composition scheme, or restaurants saying that they have a problem, that they are getting priced out of the market internationally, hotels have a problem. Those are about rates, but it's not about the fact that the system provides a much more predictable tax structure than it was available previously. So, to that extent, and in fact that's a considerable extent, GST is a huge change as far as India's economic reform story is concerned. So, all these things are coming in. Has it immediately started affecting? Has it immediately made a difference? No. Why is that so? Because first of all, it just started. For a business to be even be able to factor it in, or for a bank, for instance, to be able to say that, I know that the costs are coming down, those would take time for them to come on the plate, and those would need to be seen over the time as it goes along.
Okay, Professor Kumar, how do you look at the impact on the economy? There are reports which suggest that the government may miss the financial year 2018 revenue collection targets too. You said something about the other kinds of pressures that the GST particularly you think has put on the economy. How do you look at that?
So, as I said, in the design of it, as yet the unorganized sector is not able to deal with it properly. The organized sector is still confused about it. So, the unorganized sector employs 93% of the workforce and has 45% of the output. Now, if that gets hit even by 10%, then you are talking about a 1% rate of growth rather than 5 or 6% rate of growth. So, therefore, we have to make it very comfortable for the unorganized sector so that they don't get hit. And that's what, as I had said earlier, you have to worry about the input credit impact on it and the reverse credit charge. So, for this sector, the composition scheme and below, I think the reverse charge has to be done away with, and the input credit system that is there, that probably, so that's a design change, and that will have implications for other things. Those have to be worked out, what implications will it have. Second is, if inflation kicks up, as I said, all services prices are going up because 15% to 18% is what the thing has happened, and that's 60% of GDP. If inflation kicks up in not just the WPI etc., but in the aggregate, then that will reduce demand, and therefore the production will then decline as a result of that. So therefore we have to worry about that. So RNR rate has to be revisited. Fitment of tax rates has also to be revisited, so that actually prices tend to come down rather than go up. Then the implementation part, as you rightly said, MRP has to be strictly implemented. If that doesn't happen and the businesses begin to charge over and above that, that is why inflation will kick up even further. And that would not get reflected in the WPI because you're only going by MRP rather than the actual price that is being charged. So the actual inflation may turn out to be more. Thirdly, the poorer states, the weaker states, you have to worry about how they are faring within this entire GST setup, because if they get hit, then your disparities will tend to rise. So in other words, from the macro point of view and the micro point of view, actually there's an evolution that requires certain basic relook at the GST and a better implementation of GST. And also you have to worry about the regressivity of an indirect tax. So as Shubham says, you have to move toward direct taxes. Reform of direct taxes must be initiated. In 2005, the GST and the direct tax code was both started together, but we have done very little on the direct tax code, whereas we have moved toward the GST. We need to move toward that, then GST can be simplified further.
Okay, so there are both positives and negatives that one can understand here, but the road ahead, I'll take concluding remarks from you, Dr. Pathak. What would you like to say?
As Shubham very rightly said, GST is a process. we are into the process, we are evolving. The best part is we are keeping our eyes and ears open, we are listening, we are interacting, and the feedback channels are open, and even better, we are acting on those feedbacks. Maybe the last council decisions you saw, and there were many decisions which were in favor of the small and medium businesses. Even now, the recommendations of the Council of Ministers, which have been constituted, they have recommended, and I believe GST Council, when it meets on November 10, they'll again give their final remarks on those, or final decisions on these recommendations.
Okay, thank you very much, gentlemen, for joining me in this program. Well, the final call on the Ministers' panel recommendations will be taken by the GST Council, chaired by Finance Minister Arun Jaitley and comprising his state counterparts, when it meets on November 10 in Assam. Thanks for watching Insight. Goodbye.